What's up, guys? My name is P, and I'd like to welcome you to another edition of Phipps Tips. In today's episode, we're going to do a little something a bit different today, guys. We're going to take a little beginner's training course in Elliot Wave principle, or Elliot Wave theory, EWT. What Elliot Wave theory is, it is a form of technical analysis that uses trends as its way to predict price movement. The first thing we want to know about Elliot Wave is that there are two types of waves. There are impulse waves, those that move with the trend, and there are corrective waves, and those are waves that move opposite of the trend. And now the impulse waves are not always up. There are impulse waves down and corrective waves up, as we will discuss in probably another video because that gets to be extensive. But from here, we're just going to get into the basics. The first five, the first three corrective, and that will complete a single Elliot cycle. So you kind of want to gauge out what you're looking at first, guys. This is going to be where we're working, this area right here. And we're currently on the Bitcoin versus US dollar 4-hour scale using the Bitfinex exchange information. And as you can see from the big red drop here, Bitcoin has not had a good last few days. I mean, the price is just plummeting right now. So I want to take this chance to give you guys a little, hopefully some good news in what looks to be like a massive dumping sell-off. So with all that being said, I just want to remind everybody that this is not financial advice, should not be taken as financial advice. This is just for educational purposes. I'm not even sure about it myself. This is my best guess from just what I've been learning myself, and I'm hoping to just educate you guys, not to send you off into some blind trade. So, with that out of the way, let's get into this. We're going to start off with our first 5 Elliot Wave impulses here. So we'll click on it. I had it changed colors because I was messing with it earlier. We're going to go back to the blue that I had it originally. Okay, guys. Now I'm going to turn off auto here so we can move the screen around a little bit. Pick that back out. Okay, so as I was telling you guys earlier, these waves, these Elliot wave structures, they move in 5 waves. 3 impulse and 2 corrective. So you start at the bottom of what looks to be like the start of your run-up, and just for argument's sake, we're going to start right here at like the 6,815. And we're going to run up to our first high, and actually I'm just going to hit it at the top of the candle. I'm not going to worry about the wick because the wicks make things confusing. So we're just going to hit it at the top of the candle, and that will complete our first impulse wave. Now we go into our first corrective wave, and that's down here. We want to go to our first low, and that's at the bottom of this, looks to be green candle before it was pushed back up and rebought, which is amazing. So that creates our first corrective wave. Now, wave 3, there's a special thing about wave 3. Wave 3 generally in Elliot Wave is never the shortest and is often the longest, but not always. Sometimes a first wave or a fifth wave extension can happen, which will make those waves a little bit longer. Excuse me, guys. But for where we're at right now, the third wave is going to be our longest wave, and we'll stop it here at the top of there. Now, see how we got a little bit of chop here? Like we go down, but it comes up, and then it goes back down again. We're going to disqualify that because it does not reach a new high. It stays below the third wave, so we disqualify that. And I just run this down to the low that it made here on the other side of it. And another rule that Elliot Wave has, that if it is broken, it means that your count is off or there was no Elliot Wave structure to be had. But the fourth wave can never retrace into the first retracement wave. Like, let me redraw it here for you and I'll show you what I'm talking about. We'll go from here to here, here, here. And this wave, this fourth wave, could not retrace down into this area. It couldn't come down that far and then go up. That is not allowed in Elliot Wave. So, as long as all of those rules are met, then this is a valid Elliot Wave. We'll put it back up right here. There, and then we end here. And this, guys, generally on the fifth wave will extend a little bit further. I believe it's like 2/3 the size of the third wave generally, or 60%, 62% of the third wave generally the size. So this got truncated a little bit, which is fine. You know, I'm just using this for in educational and instructional purposes. So there's our first impulse wave, guys. And these first 5 waves here, this is actually the beginning of a larger cycle. But we'll get into that in a minute. Okay, now that we have finished our first 5 waves up, now we have a corrective pattern that needs to take place. And that is always a 3-wave pattern down. So it's labeled ABC, and we start at the same point that our 5th wave ended, and we come down to the low, the first low that it had before it bounced. We come up here to the high, and then down again to what perceives to be the current low. And that, guys, right there is our first Elliot Wave cycle complete. The first 5 waves and then the first 3 corrective waves. Now, what I was talking about earlier, just a few moments ago, about this being the first wave in a larger wave, would be something like this. We're going to zoom out. We're going to turn on auto. There we go. We're going to zoom back in just a tear. And from there, guys, what we can assume is this. We're going to change the color of this 5-wave pattern because it is a completely different 5 waves. We'll go with bright green. What do you say? And we'll thicken it just to drive the point home. We would actually start at the same point that we started our original first wave, right here. And then we'd go to our highest point on the 5-wave impulse, which would be at the point of 5. And that actually makes the first impulse wave of a bigger cycle, guys. So, and then this would retrace down like so to C, and that would be our first corrective wave of a bigger cycle. And then it goes up again to our 3rd wave, our 4th wave, which, remember, cannot retrace back into wave 2. So just for argument's sake, we're going to just put it here. And then wave 5 is generally 60% the size of wave 3. So we'll, just for argument's sake, stick it there. And there would be a cycle or the first half of another cycle, which would have a corrective pattern also with it, another ABC pattern, like so. And this would all just continue, guys, until like you have 3 of these structures, and then we have a corrective 5-wave Elliot wave for a structure. Instead of an impulse, it becomes corrective. So we would actually run this up 3 times. This is the way it would go. And then you would see one of these 5-wave structures descending, like bringing the price down. And that's what keeps the balance, guys. Like, for every upward motion, there has to be like some sort of downward momentum, because nothing can just continue going up for forever. It just doesn't happen. Someone will always be looking to make a profit. Just remember that, guys. Like, if you think like you're trading, and you see the price get really high, and you're kind of afraid, like, should I sell? Is the price going to dump, or are they going to dump and I'm going to be stuck holding bags? This is just one way that you can, perceive, get a kind of idea when to, I don't want to sound all cliche, but know when to hold them and know when to fold them type of deal. Like, if you know that there's going to be a retracement, like, say you missed out on this first wave here. This, you think you missed out on the 5 waves, and then you're coming into the corrective. Now, this right here is actually a good entry point. This, at the bottom of this wave 2. So you missed, say 50% of the run-up. That happens. But then you've got this entire run-up here. And then once you hit the top of what you think could be like where the beginning of the correction is going to happen, you sell. You wait for the correction. You buy in lower, increasing the amount of volume that you had in your coin. And then you just hold and wait for impulse wave 5. And then again, sell at the top. This is typically, guys, just how trading, that's how it works. It's how you should do it to increase your holding and increase your maximum overall buying power and value in the long term. Now, these structures here, Elliot Wave, it's a very fragile thing. Like, these structures can be broken. Like, there's nothing saying that the trend is going to just follow through here. This is just what should happen technically if the market is left to do what it should and want to do. Now, of course, cryptocurrency, its market cap is extremely low, guys. Very, very, very low. Like, considering, I mean, $300 billion is a lot of money, but when one stock, like, say, Google or Facebook or Ford, is as much as your entire market, if one stock is valued as much as the entire market that you're in, you've got to expect some sort of volatility and some sort of price manipulation. There's just not enough money to make that, invalid. Like, people who control 5% of Bitcoin can dictate what this price is going to do, guys. And they do. I mean, it's apparent. It's obvious in lots of things. Like, the reason I honestly believe that we're up as high as we are right now is because of manipulation. This very first run-up that we had back in April that sent us into like the 8,000 range and gave, everybody, that's when the bulls, that's when everybody, or yeah, it was in the beginning of April, about the 12th of April. That's when everybody got all this bullish sentiment, and I mean, we increased steadily and healthily, and we retraced a bit, guys. But you know, a lot of people have been saying that this run up right here that we saw that took us all the way up to $20,000, this we did not receive. We didn't get the drawback that we needed. Like, this right here was not enough. This drop, we needed to see a further retrace to like 5,000, 4,000, somewhere around there. And I believed, like, before that huge spike happened, I honestly thought that that's where we were headed. Like, we would gain a little headway, and then boom, the bottom would drop out from out of us. Then we'd move a little more, like start to try to pick it back up, pick it back up, pick it back up, and then the bottom would drop out again. There would be a big, like, spike of sell pressure, and the price would drop back down to, you know, the mid 6,000s. And then one day, like, out of nowhere, a volume spike in about an hour brought the price up $1,000, and we've been on the run ever since. But now that we're seeing a little bit of retrace, you know, a lot of people are scared. I honestly, I mean, we're at the 50% retracement, and I'll show you what I mean here too, guys. We're going to bust out a little bit of Fibonacci. I'm feeling a little bit, you know, instructive today. So what we're going to do is we're going to remove this bigger portion of the our Elliot Wave, and we're going to remove the ABC pattern too, just so we can see everything a little more clearly. I'm going to zoom in, turn on auto so I get a bigger stretch. There we go. And I'm going to grab my Fibonacci retracement tool, guys, and this is one of my favorite tools to use. Typically, when it comes to stocks and assets and whatnot, there is a certain rule that they follow, a certain, like, algorithm, I guess. And if you start at their most recent low, like, I'm going to start at the bottom of this run-up that we just recently had. You can, if I zoom in here a little more, you see where that red candle is. I'm going to turn off auto, cancel that real quick, just so you guys can see. I'm going to, sorry about that, guys, a little bit of a technical difficulty. But we're back, and I've got the Fibonacci retracement tool placed. I started at our most recent low. Actually, I started at the bottom of that run-up that we started at with Bitcoin, and I took it to the very top of this green candle. And over here on the left side of the graph, there's a set of numbers. There's 0.236, 0.382, 0.5, 0.618, and 0.786. And then it's 1.236, and it goes down that way. And these are percentages. Like, this is a 23%, 38%, 50%, and I generally round the 618 to 62%. That's just how I feel. But as we can see, like, Bitcoin bounced, like, it punched through the 50% retracement and is currently jawing back. There's still about 2 hours left of this before this candle ends, and we'll see what happens. But this is a good area of resistance for Bitcoin. If we pull out just a little bit, I'm going to turn auto off again, and we can see all this price action through here that we're currently, like, running around in. I want to grab a box just so I can highlight it a little bit better for you. And from there till, yeah, right around in through here, guys, there's all kinds of price action. So, I mean, this is a very good, come on, this is a very good area of support for Bitcoin right now that it's dancing on. And this is a great point for this to bounce and start our first impulse wave of our second structure. which would be great. Like we would see, like I showed you earlier with the ABC, we're currently retracing on our 50, so we've retraced a 50% amount, which, you know, generally typically happens. And then we grab our Elliot Wave again, and then we move another 5. Just like that. And up and up and up. And like I said, guys, we do this 3 times. I want to grab our ABC, and I'll show you what I'm talking about with the, just for, these are not actual price points or anything that I would actually use. I'm just punching these out to show you guys, to get a view on it. And then we'll go the 1, 2, 3, 4, 5 again. And then, guys, this is where it changes. This is where we get a 5, 3, 5 pattern down. Instead of just a 3, 5, 3, it'd be a 5, 3, 5. And what I mean by 5, 3, 5 is 5 waves up, 3 waves corrective. 5 waves up, 3 waves corrective, 5 waves up. So that's 5, 3, 5, 3, 5. Which makes the 5, 3, 5, 3, 5. Now, it's 5 down, and then 3. But that only happens once, and then we go back into the 5, 3, 5, 3, 5 again. I know, it's confusing, and it took me a while to understand it. I did buy a book. See, we'll put this out just like that, just to drive the point home. Yeah, 5, 3, 5, 3, 5. And I bought a book that, you know, breaks the Elliot Wave down a little bit better. I mean, like, when I first got into this too, guys, I was looking at these charts like, I wish I knew what was going on here. And, you know, here's a little crash course. I mean, you know, I'm not sure that these are right. Like this count, my original count, I don't know if that's right. It looks correct to me, but I am in no way an Elliot Wave professional, or I'm just a student, really. There are guys I follow here on TradingView that are masters, that, you know, like some of the patterns they see and the waves counts they get. And there's a reason why they're rich men, that's for sure. That is for sure. But guys, that's going to wrap it up for today's video. I hope you enjoyed it. I enjoyed teaching it, that's for sure. If you're still here with me, hit that subscribe button. If you learned a little bit of Elliot Wave, hit that like button, share it with a friend. Everybody who's in crypto needs to know this, guys. Well, I understand technical analysis is only one part of, you know, the juggernaut that is cryptocurrency, and it's going to take over the world, guys. It is, I promise. We're just in a bit of a little funk right now, that's all. But yeah, I'd like to thank you guys for watching, and as always, see you in the next one. Peace.